The following segment is sponsored by Prime Capital Investment Advisors. Today, we're with Jason Noble of Prime Capital Investment talking about the bright side of high interest rates. Now, a lot of people hearing this, right? By the way, good to have you on the show with us. A lot of people listening to this know, Tom, there is really no good or bright side or loving side about high interest rates, but you've got something that you can tell the people about.
I mean, you got higher credit cards and mortgages, right? And we're focusing on that, especially if you're going to go into some sort of debt or even going into buying like a car, right? But what is the silver lining? Well, if you are like saving money for like retirement, then you could be looking at readjusting your strategy, going for more income producing investments as well, and having a little bit more security within the strategy. That'll be a thing of consideration. But let's say you're nearing or in retirement. Before, you would have to, for these like interest rate environments that were so low really since 2009, you would have to go a little bit longer out in time to be able to get those yields. Now you could get yields at a very short-term instruments and being able to then supplement that for income needs. And another thing I'll say is like understanding how the bond and interest rate environment work. They're what's called negatively correlate. I love using big words. No, I don't. But what I'm going to say is when the interest rates go down, bond prices go up. And we are expecting the Federal Reserve to lower rates, so therefore we are expecting those bond prices to go up.
What about the market risk that's involved?
It's going to be really determined on what is the strategy that's most appropriate for you. As far as market risk, there's always risk in anything that you do. Getting out of my house today, I had to take on risk to just drive on 17, right? So, but what is the market risk going to be is what kind of investments and instruments did you go into? So that's an important factor. And that would be really well described by the advisor before you go into any of these types of strategies.
And that's one of the things I was thinking, if I came to you and we sat down, you would say, Tom, you're of this age right now. What sort of risk do you want to see? Because you've got this amount of money. You want to have this amount of money when you retire. But do you really want to go into a very strong risk, or do you want a very low risk investment in this? And you would probably advise me at my age of 70, you would say, I think it would be best for us to go with a lower risk. We won't see the returns, but the risk, we won't see the stronger returns, but the risk will be a lot lower and you will still have so much money left.
It's really going to be like how you feel about risk, to your point. I always factor that in.
And how much?
And how much risk do we want to...
How much money are you going to put into that risk?
And how much do we want to put towards that type of risk? Absolutely. I always look at what is the end goal in mind? What are you looking to accomplish? And then work that backwards into what investments and strategies we should consider.
You're talking about how much money you want to put into it. How easy is it for me to take that money out?
Great question. We always want to make sure we have what's called liquidity or easy access to your money. Now, if we do want to lock something up for a longer period of time, that could be no more than like 30% of the portfolio, so you can still access 70% immediately, and that's important.
Risk is a strong risk is the same thing as being very aggressive, correct? In a lot of ways?
It is, but then there's also what we call calculated risk.
I like that.
So calculated risk would be, maybe I don't want to drive on the Ravenel Bridge in a high wind environment.
Is this a little too good to be true?
It could sound that way, but then the reality is it has to be customized. And Advisor Hub ranking us the top 100 advisor in the entire country, finishing 5th. I pinch myself still on that kind of ranking. To be the only one on the top 100 to represent the Lowcountry, to represent South Carolina as a whole.
To represent South Carolina,
That's right. Very proud of that. But it's not what we were recognized for in 2023. It's about the work that we do for our clients, and I don't think that's too good to be true.
You're absolutely right. Jason Noble, thank you so very much for joining us today. Give these folks a call. We've got more Lowcountry Live right after this. Stay with us.